Stuff Effects, welcome back to another video. Today we're pretty much going to be talking about breaker blocks, right? By the way, I did not create any of these concepts, right? It's just things that I managed to learn from the mentor himself, ICT, right? So yeah, I'm just trying to provide everything based on how I personally utilize it and how I personally approach the markets using these PDRAs, right? And everything. So I'm kind of like making mentorship or video type thing on YouTube, right? So it's gonna provide you with the basics heading into the advanced stuff, right? Because one thing I gotta say, you gotta master the basics, or you gotta advance within the basics before you can advance at the advances, if that makes sense. But yeah, this case right here, right? What we have two types of PDRAs. We have a bullish breaker and a bearish breaker, right? So bullish breaker, right, is the last bullish swing candle within a swing high, referring to, in simple terms, when we're coming from a downtrend like this, right? We'll just say this was like a downtrend, right? Price creates a swing high, right? It draws lower, right? Specifically to the swing low, right? And then it goes back higher, right? Closes above the last highest bullish candle, not the black one, the white one. It's indicating a bullish market, if that makes sense, right? So as soon as price closes above it, right, we identify that as a shift in state of delivery or a change in market direction or trend direction. What does this mean? As soon as price closes above a swing high, right, if we're bullish, right, it closes above a bullish candle, we look to seek higher prices, right? These are the few footprints that price leaves to indicate that we are now changing our states within delivery, right? And right here, we got the same version, but in this case, is a breaker block, right? Price goes higher, it goes lower, creates a swing low, draws back higher, right? Closes above this bearish candle right there, right? Closes above it with this candle and then moves higher, right? So this would generally behave as an order block, just to say the least, right? Then it draws back lower, violating the order block, because this was pretty much supposed to support higher prices, right? But as soon as it's violated, it becomes an inversion, if that makes sense, right? So once this happens within price, we pretty much look to see low prices. This identifies a shift in state of delivery, a change in character, a change in trend direction, right? In simple terms, it's indicating that now we've changed in direction. And that's always clear or present when price closes below the previous order block turns into a breaker low, right? It's not the black candle, which was identifying higher prices, the white one, right? And a few rules for breaker blocks, right, is simply as soon as price closes above, indicating our market is now trying to tell us that we're moving higher, right? Price tends to draw back into the range, right, to potentially revisit inefficiencies, which are in forms of fair value gaps, inversion fair value gaps, right, or even order blocks. But we'll go into those within the upcoming next few videos, right? The simple rules that are required to identify if a breaker block is being respected, right, is that price should not close below the low, meaning that as soon as price is retesting the low or retesting the breaker, right, it can wick out, meaning that there can be wicks outside the low of the breaker candle. But the rules are it should not close below the low, right? Because if that happens, it tends to indicate that this was just a sweep of buy side, and then price could potentially continue drawing lower, right? That's why usually when price closes above, we anticipate some form of retracement back into a fair value gap, and then want to see price reject that area. Then we can execute a trade, right? So in simple terms, this is how you'd identify breakers in a bullish trend. Price draws low, right? Goes high, creates a bullish candle, which is an order block as soon as price closes below it, right? It draws higher, violates the order block, then closes above it. It becomes a new breaker block. Price draws back into the range, into an inefficiency, or in simple terms, back into the breaker block, then rejects and then continues going higher, right? Same way here. Price draws lower, closes below the zone, right? But we're still in a bullish trend. So even breaker blocks within strong bullish trends, they can still be identified, right? Price draws lower, closes below, draws back higher to close above it. It becomes a valid breaker block, right? And usually when price doesn't draw back into the breaker like this, when price breaks out and then goes back into the range, when price just impulsively draws like that, right? We identify those as low resistant runs, meaning that they are no price is simply in a hurry to get somewhere, right? Right now we got the same thing for a bearish trend. Price closes below right here is indicating state of delivery, change of states of delivery, right? Draws back into the range, then rejects lower. Same thing here, goes higher, closes above, right? Then draws lower, closes below. Then it becomes a break as soon as price closes below. So in simple terms, here's how you'd want to see it, right? Within each and every trend, this is visible. But the skill is learning how to identify it, right? So you'd be required to go to your true charts to simply identify this, right? Because right now it's just provided at base level, right? And it's actually should be this basic. This is pretty much how clear it should look when you're trading, right? So hopefully everybody found this video insightful. Yeah, to some people this might be boring because it's general knowledge, but yeah, for the new beginners, hopefully you found this video insightful, simple, and straight to the point, right? See you guys on the next video. Have a great day.